Bismillah. Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome back to another podcast with MuslimFin. Today it's going to be myself and Siraj Buzik, and we're continuing on from last week's conversation around lending or Islamic finance, and talking about things like mortgages, vehicle finance, and all those really fun, interesting things. So Siraj, shukran for joining us again today. You are really truly the Islamic banking expert, and what we want to do is, like I said, continue on from our conversation last week. We were talking about loans. So what are we talking about this week?
Yeah, Alhamdulillah, Ali, I think we had a great discussion last week. I think we touched on lending and loans within Islamic finance and the permissibility around it and what options we do have. And then, we kind of explored, went down the road of Islamic mortgages or Islamic property finance. And I think tonight we just want to take a step back and, discuss where that fits in within Islamic banking. What is Islamic finance? It's a modern term. It's something that did not perhaps exist 1600 years ago as Islamic finance, right? But, as Muslims, we have a lot of principles and we've got a framework and guidelines that, that we live by. And the beauty of Islam is that, it caters to every part of our life, whether it's the way we pray, whether it's the way we sleep, whether it's the way we clean ourselves. But there are also principles that speaks to how we do business, how we do transactions and finance as well. And that's what Islamic finance is. So it's the way we do business transactions, but from an Islamic perspective and our Islamic rules and guidelines around that. So that's in essence, essentially what Islamic finance is. So I think one of the questions that we normally come across is that, we speak about the principles that's probably been around for 1500 years ago. How, how does that fit in today's modern economy, in modern markets? And as Muslims, we believe that, these principles that we live by are timeless principles. We can maybe, discuss or unpack the implementation of it. Because remember, the way we do business today, it's different to the way business was done 1500 years ago. With the advancement and technology and our current economic system, which is probably set up for conventional finance. So what our scholars and our people have tried to do was create a Sharia-compliant alternative that caters to the Muslims. And I think the challenge is implementing it into the current economic structures. And that's where we find ourselves in terms of Islamic finance. So here, I think it's a topic that we can explore. There's a lot of points that we can cover within Islamic finance, things like property finance, vehicle finance, there's trade finance, investments. All these type of things will fall under the Islamic finance banner and the rules and Sharia guidelines around those.
Okay, so what I'm hearing you saying is that back 1444 years ago, in the time of the Prophet, the way business was done there was obviously very different to kind of the way things are done today. We are in a technological world. We use things like computers now. We have electronic money. We have different ways of money exchange. So why would so I guess the question is, why would Islamic finance now be valid in kind of this modern time, and why is it important for our viewers and our community to kind of implement Islamic finance into their lives?
Yeah, I think that's a great question, Ali, and I think it comes down to probably one of the main reasons why Islamic finance exists, and it probably speaks to the prohibition of riba. And our scholars and our ulama have unanimously agreed that riba, it's haram, and what we see today in the form of interest and usury is what our ulama all agree that that is what riba is. So what has happened is that from a conventional perspective, money gets traded for money um, at a price. So, for example, and I think I made this example last week, Ali, if I had to borrow you 1,000 Rand today, and I said, look, you can give it to me back at the end of the month, but I'm going to charge you for that period. And I'm going to charge you $100. So you give me 1,100 bucks at the end of the month. That's considered interest, the transaction, and it's not allowed in Islam. And fundamentally, this is how conventional finance works. Whether you're buying a property, whether you're buying a vehicle, whether you're investing, there is this element of interest, which we consider riba, which is prohibited in Islam. So I think from a Muslim perspective, for a very long time, we did not have the alternative solutions to these. So it was very restrictive for our Muslim community to actually be involved in the economy, whether it's purchasing property, vehicles, getting involved in business transactions, etc. I think a lot of work has been done in the background by our scholars, by our experts to create an alternative, a Sharia-compliant alternative where we can actually partake in the economy, where we can purchase property, where we can set up businesses, where we can invest and earn a Sharia-compliant return as opposed to the interest that we're getting from a conventional perspective. So Islamic finance is very much something that we definitely need to look at and consider. It's something that wasn't available perhaps to our parents or our forefathers before us, but today there are institutions that are making this stuff available and accessible to the Muslim community at large. Um, I can say probably from a market perspective, it might not be as widespread as conventional, and some of the products might not be accessible to everybody depending on your demographics. So I mean, it's obviously going to be difficult if you're a Muslim community or a minority, a Muslim minority in a non-Muslim country. Whereas if you're a Muslim, you know, majority, I think, like for example, your countries like Malaysia, Indonesia, and your Arabian countries, it's a bit much easier from a product innovation or product production or creating these type of products and solutions for our clients. But I think a lot of great strides have been made over the last decade. Looking at South Africa, you can find, a lot of these products easily available in the market, whether it be property finance, vehicle finance, Sharia compliant investments, etc. And I think from a community perspective, we need to start asking those questions. Go back to your bank, your institution, and ask what are the Sharia compliant alternatives that are available, and they'll be surprised to find out that some of the institutions actually offer all of these Sharia compliant alternatives to the conventional.
Great. And tonight I was hoping that we could maybe unpack a little bit for our audience. So to say, okay, look, if we were to look at, I mean, firstly, when it comes to banking, what I find interesting and what a lot of people maybe don't or think about is that in many cases that first bank account that you open, you kind of end up being loyal to that financial institution. So what's happening now is that you'll find their teen accounts, and in certain cases, parents can even open up accounts for minors, or not only minors, but for infants, basically, and so you can have a bank account from the age that you're born, basically, and what ends up happening with in many cases is even within the Muslim community within South Africa, as a teenager, maybe you have a bank account opened, or when you go to university, you get your first bank account opened, someone comes around and it opens up a bank account for you at campus. And then you end up staying with that bank account or that bank for your entire life until retirement. And so it's important that we try to make sure that we get the message out to parents, get the message out to the youth to say, hey, you know what, there are these options available for you, from a banking perspective. Start saving in the Sharia compliant way, earn that profit share, start your life, with trying to avoid things like riba, which is something that you mentioned. Another thing that I wanted to unpack tonight, for the audience is around specifically around like and I thought maybe we could just focus on, like the home mortgage, for example. And what I was thinking is maybe we could just unpack some of the, the differences of how the products work, from a retail perspective. So if I'm a person and I'm looking to buy a property, okay, and I want to make sure that I go to my bank and they offer Sharia compliant home a mortgage. How do I go about that? And what are specific, maybe differences or little nuances that we need to be aware of?
Okay, so that's a good question, Ali. And I just want to touch on one of the things you mentioned earlier. I think the banks also strategize to actually catch a client quite early. So they have these marketing stunts where they actually go out to campuses, sign students up, because they do know most likely, once you open your first bank account, you will most likely stay with that bank, throughout your life, because as you grow within your life, whether you're purchasing your first car, it's almost a 5-year commitment. If you look at the terms when you purchase a car, and if they get you into a home loan or a mortgage, they could trap you for 20 years, and you become loyal. You stay with that bank for that time period. There's definitely something from a banking perspective that we need to educate the masses in terms of what the options are. That when they are offered these products, to to ask about the Sharia compliant products that are available, and perhaps look into those. But coming back to your question on the home loan, so the nice thing about the home loans, and especially in the current market, is that the client experience is very similar to what a conventional client or a client is taking up a conventional bond. So from a process application perspective, you will get the same, you'll treat it exactly the same. So it's most likely the same documents that you're completing, your personal information. You will have to supply your income, whether it be your payslip. They will look at your credit history, if you have any other debt and how you've been paying that. So those are all credit criteria they will look at when you're applying for a bond, and that's whether you're applying for an Islamic home loan or for a conventional home loan. And that process is exactly the same.
So just
So
sorry to
from a
interrupt
client
you there,
experience,
but just on
go for
that,
it.
on the credit score, because I think sometimes maybe that's a point that we need to just kind of stop and just chat about quickly. Because on the credit score, sometimes a first-time home buyer, they don't realize that they need to have some form of credit score, right? So now you go and you say, okay, look, I'm thinking of getting married and I want to purchase a home, or I'm considering buying a home, or I want to invest in a property, whatever the reason is. I'm straight out of university. I may not have worked before. What are some of the things that our audience needs to be aware of when what do banks actually look at when they look at credit score?
Well, they look at your credit score, they look at your credit behavior. What that means is, if you have acquired any other debt prior to looking to apply for a home loan, they will look at your behavior in terms of how you've been paying that debt. Right? Are you paying on time? Are you falling behind on payments? Things like that. And that actually has a huge impact on your credit score and your credit rating.
So would that be like, for example, a card with a store, for example? So you get a
It could
card
be
with a
a cell
store
phone
and you
contract.
purchase your oh,
Yeah,
okay, cell
exactly.
phone contract.
It could be a cell
Okay.
phone contract. It could be a clothing account that you have. And again, we can go into clothing account and the interest being charged there.
Mm.
But again, those are things that the banks will look at when applying for a home loan. So whether it's an Islamic home loan or a conventional home loan, the banks will ensure that you can firstly afford it, that you can actually, because again, from a bank's perspective, there are rules and regulations around lending money or providing finance, that they can't over indebt people. So they will do those credit checks to ensure that the client can actually afford to take up that product. And that's not only to protect the bank, but it's to protect the client as well. So those are some of the criteria they look at when you're applying for it. And again, and that is for both conventional and for Islamic as well. Right? I know there's this notion in the market that, well, I'm Muslim and I should be able to qualify for an Islamic home loan on the basis that I'm Muslim. But it doesn't work like that. There are certain criteria that you need to meet to qualify for it. And like I mentioned, you should be able to afford the finance provided to you. Otherwise, unfortunately, it will not be granted.
No, that's good, and so it's interesting because most times before people purchase a home, more than likely they are going to have some form of cell phone contract, or they'll have a cell phone. I mean, kids now have cell phones in high school, maybe even primary school sometimes, Yeah, I don't know if I think you have to be 18 before you can take out a contract, but at least at that time you'll have something built up. Now, we talked about those teen accounts, and we talked about those accounts we opened, that your parents may have opened for you. Do those also help with the banks in establishing some form of relationship with that bank in order to be able to maybe qualify for a mortgage or a bond at the later stage?
So yeah, so they'll look at that as well. So we'll definitely look at your time with the bank, how long you've been with the bank, what products you do have with the bank. They'll look at what products you have outside the bank as well. So all that will count in your favor. They will also look at your income versus your expenses to ensure that you do have a surplus that will cover the repayments of a property finance, as an example. So those are all things they will do upfront, Islamic and conventional. There's no difference there's not an Islamic credit criteria for Islamic mortgages. It's the same credit criteria that's looked at. So that is the same. And there's no Sharia governance around that. Those are the criteria that you need to meet when applying for a bond, whether it be Islamic or conventional. And then, if you do qualify, again, from where the difference is in terms of the structure of the contract of the property finance. So from an Islamic perspective, they use a principle known as diminishing musharaka. Now, diminishing musharaka is a partnership agreement where the bank and the client goes into a partnership to purchase the property. And with the agreement that over time, the bank will sell its share of the property to the client over a period until the client then gets full ownership of the property. So now that's a lot to take in. So what basically happens is that the bank will sell you each portion in the share on an annual basis and allow you to pay it off monthly over 12 months. That makes sense, right? And then come in at the anniversary, they will sell you another portion of the property, allow you to pay it off over 12 months, and then share it. So what happens is your repayment that you're making to the bank, it's made up of two portions. It's an equity portion as well as the profit portion, right? So the equity portion is that you are paying the bank the installment, right, to actually acquire the equity in the property, right? And it's charging you as well for the free use of the property. That makes sense. Because
Okay,
remember,
so
even
that's
though
the profit.
you
That's
are
the profit
buying,
share.
that's the profit share the bank is charging. And that's how the
Yeah.
bank makes money. Instead of charging you interest, they're charging you for the use of the property whilst you're still acquiring the shares over time. Because remember, even though you might only own 10% share of the property, but you're utilizing the full house, getting the benefit of the home. So you're paying basically a lease for living in the house. And that's the profit margin or the profit that the bank actually makes off those installments. And this is done on an annual basis. Right? So if you've taken a bond over 20 years, you'll have 20 anniversaries. And every year, the bank will sell you a share, allow you to pay it off every month for 12 months, and then sell you another share, etc. And as you go along, you will acquire the 100% share at the end of your term.
So that's very interesting. So for example, obviously there is in terms of that profit share, there's normally a rate attached to that. So there's the equity portion and then there's the profit share portion. And so let's say, for example, if we look at kind of the high interest rate environment that we're in at the moment, right? Although the banks are fully Sharia compliant banks or Sharia windows within a conventional bank, they still have to kind of keep up with what for example, the Federal Reserve and what they may be doing and raising rates and South African Reserve Bank and those types of things. So that 12-month equity portion that gets kind of sold to you and you pay it off over a period, that then you almost in a sense lock into that profit share amount that you're going to be paying. So it's a fixed amount that you pay.
Correct. So that's a very good point you make, Ali. So basically for that 12 months, your installment is fixed at a certain amount. So you'll pay the same installment every single month for 12 months. So what is interesting here is, and we've seen it over the last year or so, is that on the conventional side, we've seen the interest rate fluctuate. In fact, not fluctuate, actually increase several times over the last year or two. But if you're locked into an Islamic mortgage property finance, your installment is fixed for that period. So irrespective of what happens to the interest rate of the market, it doesn't impact you from a home loan perspective if you have the Islamic property finance product as opposed to the conventional. If that makes sense.
So, yeah, that's very interesting, and obviously it can work in the converse as well. So it might be on the conventional side that the interest rates may be going up, but in this environment that we're currently in, people that would have been in that Islamic finance for a home bond or mortgage would have saved quite a bit of money.
Correct. And we can look at it the other way as well. Look, should the interest rate have dropped on the conventional side? Unfortunately, if you in the Islamic home loan, you won't get the benefit of a lower installment. Right. So there's two ways to it, and it's good to mention it. But I mean, you've seen the environment we're currently in. The rates are been going up over the last year or so. So again, from an Islamic perspective, you're a bit more protected from paying high installments and from the interest rates. So you, in the long term, there's a possibility you could save money in terms of having an Islamic property finance as opposed to that. Over and above that, because of the way the Islamic home loan or Islamic property finance is structured, you become a shareholder in your property. What this means is that after 2, 3, 5, 10 years, you could be 10, 20, 30, 40% shareholder of your property. And this is an important point to raise, is that in the event of a default, and we speak about defaults, in the event that you can no longer afford your property, right? From an Islamic perspective, you're sort of more protected in the sense that, yes, you may be in a position where you can no longer afford the property finance. However, you are a shareholder in your property. So should it get to a point where you would need to sell, the bank needs to sell the property, they need to pay out your share percentage that you own in your Yes, so as I was saying, from Islamic property finance side, because you are acquiring shares in your property, you become a shareholder in that property. So in the event that you're in a position where you can no longer afford the property, or you need to sell, or the bank needs to sell your property, right? You will get paid out the percentage that you own in the property. So if, for example, after 7 years, you own 40% or 50% of your property, and it gets to a point where you can no longer afford the property and you have to sell. When you sell it, when they sell the property, you will receive that percentage that you own in the property. And that's a possibility that you might get back all your installments, if not more, because of the, appreciation of the property over time. So that's a bit of good news for Muslims and how Islamic property finance work, as opposed to conventional, where most of the risk is borne on the consumer as opposed to the bank.
I find that absolutely amazing, because for me that extra form of protection just makes the Islamic mortgage so much more attractive. It's nice to know that you're Muslim, you have this product available to you, and that is that added layer of protection, the ownership that you have within the within your own home. And the fact that there's a relationship between your bank, Islamic bank or Islamic window, and yourself, there's an equity portion that you own, and then you kind of leasing your property in a sense from the bank. But Siraj, I think that is going to be it for us for this evening. Shukran for your time. I think there's definitely a lot more that we need to unpack. What I want to say to the audience is, if you like this content, please like, share, and subscribe to our channel. You're going to be seeing a lot more of myself and Siraj and some of our other experts.
Sure.
We also plan to get a lot more, experts onto the show. And so please leave some comments in the comment section. Tell us what it is that you want to see. Let us know, what topics you're interested in, and we'll make sure that we, get it out to you guys. But for now, from us, the MuslimFin team, Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum.